10 a.m. here in Lagos, Nigeria. Thank you for joining us. This is Business Morning. I'm Ladi Williams.
And I'm Ini John McQuarrie. Welcome to an hour of business talk on Channels Television. Well, we'll begin with oil prices, which is rebound today after falling in the previous session. But gains are likely to be capped amid growing concerns about fuel demand in India, the world's third biggest crude importer, now slammed by spiraling new coronavirus cases. Brent crude was up 36 cents at $66.01 a barrel after dropping 0.7% on Monday. U.S. oil gained 36 cents to $62.27 a barrel after declining by 0.4% the previous session. India's woes come as OPEC Plus sets to discuss policy on production at a meeting this week. There are questions as to whether OPEC Plus feels that the situation is bad enough to alter its planned production easing from the 1st of May. Analysts expect that the group will announce no changes to its plan when it meets tomorrow.
And the president of the Africa Development Bank, Dr. Akiwumi Adesina, believes Africa is on the path to recovery from the COVID-19 pandemic as he projects the continent's economy to grow by 3.4% this year. Speaking at the virtual high-level European Union Africa Green Investment Forum, Dr. Adesina adds that the recovery will cut across the board on the continent. He insists that the future looks better and calls for increased investment in the opportunities Africa has to cover on its path to recovery. Do take a listen.
The African Continental Free Trade Area is now the single largest free trade zone in the world. And now with a population that will reach 2.4 billion people by 2050, Africa is a huge market offering incredible opportunities. Now, if you're not invested in Africa, you are simply missing out. In a COVID-19 era, we obviously have challenges. The pandemic has thrown spanners in the wheels of economic growth and investments around the world. And Africa is no exception. Africa witnessed its lowest GDP growth in 5 decades due to this pandemic. But the future looks much better, even if challenging. Growth is projected to recover from minus 2.1% in 2020 to 3.4% this year. The recovery will be across the board for oil-dependent countries, commodities-dependent countries, tourism-dependent economies, and non-commodity-dependent economies. And the recovery must take advantage of new business opportunities brought about by the COVID-19 pandemic, especially in the digital economy and the new business normal offered through ICT platforms.
Well, Adi, that's great hope coming from Dr. Akiwumi there that the world is recovering, Africa is recovering, and the digital world is becoming the new normal now.
He's quite optimistic there, and I do share his optimism too.
It's good to remain optimistic. Well, moving on now, the Center for Values in Leadership, a not-for-profit organization, continues to stir conversations on how Nigeria can make the best of its resources to build a strong manufacturing sector. In this new series, the key issues around value chains, infrastructure, political will, and industrial policy are thrown up, all to see manufacturing companies up and running for the main purpose of wealth creation. Let's listen to the report.
Manufacturing, mining, utilities, and other subsects of industrialization in Nigeria account for a tiny proportion of the nation's economic activity.
The various parts.
And this virtual conference, moderated by Professor Patitami, is pushing a robust conversation on how Nigeria can build thriving industries.
We have across the country, from every part of the country, some leaders who will shed light on thinking and thought about how that can happen. Bear in mind, particularly, current situation in our country, where unemployment is at 33%.
Nigerians and foreign nationals who have done extensive research on the nation's economy are leading the discussion. Professor Paul Collier, the distinguished Oxford University economist, says oil boom killed the nascent development in the Nigerian's manufacturing sector.
Oil poured money into central government, and so it created Dutch disease is an economic phenomenon, I think. But what the oil pouring into the center created was a political phenomenon, which I think of as the resource curse. And the resource curse led to big, grandiose government projects, which inevitably then became the subject of a massive frenzy of patronage.
Dr. Kandi Yumkela, a Sierra Leonean agriculture economist, says industrialization is not by accident, but a deliberate, sustained economic action expected to be pursued to the end.
Paul mentioned that in the China case, it was not a quick fix. It was 40 years of experimentation. 40 years of experimentation. They tried it, they learned from the good, from the success and the failure, but they kept at it continuously. In the case of Nigeria, we lack that consistency.
The panelists profile that the nation goes back to the basics and leverage on the nation's comparative advantage. They are also wary of the issues around governance and policy.
That you cannot actually begin to develop as a country or have balanced growth based on an industrialization strategy without having a solid world-class infrastructure base.
A lot of our present-day politicians are so short-term. Tell them to come and plant cocoa, they will prefer cassava or corn because they will harvest it in their tenure. They will tell you, oh, if I plant cocoa, my successor will be the one to harvest it.
If the leadership are not on the table to hear such ideas that are being, proposed by Kande and the other speakers, and understanding the challenges that not just the country but the states face, how are they going to change? So in other words, we are just dialoguing among ourselves, and they will continue.
Center for Values and Leadership Talk Fest, the 5th edition on manufacturing, brings up the key conversation on the path to post-oil Nigeria and how the country can generate employment and solution to upturn the negative trend. Dari Idu, Channels Television News.
You're welcome back. Well, the Nigerian Electricity Regulatory Commission has revealed plans to commence the processes for the July 2021 minor review of the multi-year tariff order 2020, which is done every 6 months. According to a notice by NERC, the MYTO review will consider changes in inflation, foreign exchange, gas prices, and available generation capacity, as well as required capital expenditure needed in the evacuation and distribution of generation capacity. The electricity regulator says it will also conclude the extraordinary tariff review process for the 11 electricity distribution companies in a bid to consider their respective 5-year performance improvement plans. The process is in line with their requests for review of capital expenditure proposed in the plans. To discuss some more about the impacts of the review and, of course, activities in the commodities market is Oluwambe Pelumi Olanubi, an analyst with Financial Derivatives Company. Good morning, Pelumi. Thank you so much for joining us.
Thank you for joining us.
Thank you for having me.
Yeah. So one of your slides speaks to distribution of power, availability of supply of power, and now we're seeing the NERC talk about review of the tariff. And World Bank also did release a report that about $29 billion is being lost by businesses because of insufficient supply of power. Now, how do we marry these issues together?
Yeah, thank you. You would agree with me that power supply is a major overhead cost for every business in this country. Businesses, manufacturers, and even household, even people with small-scale business and large-scale, they all depend on power supply to, push their production and all that. So if power supply is actually constant in the country, that would actually affect cost of production. It will decline significantly. And the data we have actually show that about 78% of people don't have up to 12 hours power supply, which is actually detrimental to the output. So the issue of raising tariff again is not even the call. If there is power supply and people are paying for value, I'm sure, they would have, households, businesses will have no choice. They will go, but the data also show that about 93% of people with metered electricity actually subscribe regularly. This shows that if there is power supply, household businesses would actually have no issue with increase in, with subscription, but because the more the increase in the tariff and there is no output, they still go for other means of generating power supply still leave them in the same position.
Billing, which a lot of people have complained
Yes,
about.
that is about $29 billion that the nation is losing annually. That's a huge amount, if you ask me, because this can be used on other productive activities that will propel the economy towards.
What do you think are the constraints in the power sector at this moment?
There's a lot of bureaucracy in this sector, and the fact that there is no transparency in the leadership of this sector, and a willingness too of the leaders, the willingness of the sector and all the stakeholders. We have seen people try to raise other means of generating power supply, which, if you ask me, is not there. Of course, you have to find another means of survival if what you have on ground is not giving you expected outcome. So if all these negotiations and conversations are being heard and whatever is being said is actually implemented, not just talking on paper without saying, no, we've been having this conversation for quite a while now and nothing significant has actually happened. So if all these leaders and stakeholders come together, do the right thing, we expect that there will be, and if there's a full deregulation too of the sector, that will also help.
What do you mean by full deregulation of the sector?
Allowing private sector to come in to own fully.
But we have the discourse.
Yes, we do, but we don't understand that to a large extent they are not productive enough because of the structural rigidity of the economy in a whole. So these are one of the constraints that actually.
So does that bring into the conversation the issue of cost-reflective tariff? Because when you speak to the discourse, they tell you the tariff now is not reflecting, the cost. Perhaps. But then the people will also say, I mean, let's see an improvement before
we actually pay.
It is actually fair to agree with what the people are saying because we all want value for our money. I mean, we are all in Nigeria. We know what is going on. So for every 1 naira that is going out of the pocket, we want to see value for it. So cost-reflective tariff is actually what we expect to see. And in the real sense, we aren't saying that. Increasing the tariff because of production, generating a power supply, we understand from the for producers' angle, but also for households and firms, businesses that are paying this huge amount and are not having this impact on their businesses, they also raise eyebrow, and it's okay to ask such questions.
What's your outlook for the review?
For the review, I expect that they might still come up with raising the tariff slightly, which of course will still...
You can't expect a reduction.
We can't expect a reduction, obviously. And that will still affect household disposable income. And I hope we'll get better. I don't want to say we get worse.
Hopefully. Yeah. Well, let's go to the oil market now. India is Nigeria's largest oil trading partner and is witnessing a staggering number of COVID-19. About 2 weeks now, they've been having some very fearful figures, and it's been a factor in the price movement of oil since last week. What's the impact of this surge in cases?
It's actually disturbing to see that there is this kind of surge in COVID infection cases in a very important country like India to the Nigerian economy. I mean, an average of about 350,000 people getting infected daily in the last 3-5 days, and we've seen the death rate of about 2,000 people. Now, this has actually, even the World Health Organization have come to say this is actually disturbing and alarming, despite the fact that the vaccination process has started in major countries. And for us in Nigeria, that we export. India is actually our largest importer of our crude oil. They import about 29% of what we produce. That would mean that there is possibility of decline in demand for our crude oil because they have actually started implementing lockdown again. Some of the hospitals in Delhi, which is the capital of India, is actually overboarded. They have they don't have a space again to bring in more patients, and this is affecting their responses. And we've seen countries in the world even responding to that. We've seen like UK sending ventilators and oxygen just to help them, and even US restricting ban on raw materials to produce more vaccine for this country. So, and of course, in response to that, we've seen some other countries also placing ban on flights from these countries. For us in Nigeria, that would mean low demand because we export majorly to India, and if that happens, that will affect our FAC allocation because the export earnings of the government will be squeezed, will become smaller, and that will affect FAC allocation and affect each state and the disbursement of FAC to carry out their.
Are we already feeling the impact of this?
Well, I wouldn't say that because the last FAC that we saw showed a 12% increase in FAC allocation, and but coming months, based on that and the fact that there's possibility for declining demand for oil globally because of the lockdown restriction that we are seeing now in this country, so it's possible that the demand for oil to decline. But for us in Nigeria, the good story or the good part is because our production quota also will increase coming next week based on the last meeting they had. Yes, so that would still offset
the meeting tomorrow. I don't think a major decision. There's a meeting coming up that.
Yes, tomorrow. Yes. So we hope that they will still keep what they had said about still easing production cuts that they said relaxing it. So let's see the outcome.
Okay, let's. The Cocoa Research Institute of Nigeria said that Nigeria's cocoa yields have affected by poor hybrid. Is there any way out of this?
Now, this actually is interesting because they actually developed like 8 hybrid of cocoa 2011 rather, that's about 10 years ago. And this particular hybrid of cocoa would actually produce more yields than what we have, the regular yield, because regularly we produce 0.5 tons per hectare, but this has the potential of producing 1.5 to 2 tons per hectare. But what we've seen is that there is actually low supply of this particular breed or this particular board. And we have always said we need to improve our seedling to increase output production and all. So farmers are actually clamoring for more funds to ensure that there is more availability or supply of this particular board, this type of cocoa, because as at 2022, they actually forecasted then that by 2022, Nigeria should be producing as high as 1 million tons, annually. But we are still producing 280,000 to 300,000, which is barely 30% of our production capacity. So it's not that we cannot produce more, but the quality of what we have is not good. So that's why they're asking for funding to improve the production and supply, and that will actually affect cocoa-related products, and it will also help and boost our export earnings, since cocoa is the second largest export source of export earnings in Nigeria.
I wish we could talk about the processing of cocoa and not just the raw cocoa. I mean, because the value
make
chain.
More money from
exactly. I mean, there's
this.
chocolate. Now we're talking of beverages, and the prices have gone up and everything. But let's talk about wheat. Global wheat prices have gone up now, and flour millers are groaning. A bag of wheat is costing about 15,000 naira. Well, with the intended plan by the CBN, I mean, we heard that they may be, it's not yet confirmed, that forex may be limited so that we can encourage more local production and consumption of wheat. Is it going to make any difference?
Now, in Nigeria currently, what we produce is barely 10% of what we actually consume in terms of production processes and even for making wheat flour. We understand that wheat is actually a major input used in production of major household staples in the country, and even wheat flour itself, and for producing other food items like noodles, like pastas, etc. So an increase in wheat price, what it means is that we have to spend more to actually acquire, and that will increase cost of prices through import inflation. So that means that, and for us in Nigeria, we don't produce the actual type of wheat that is needed in this production process. That is the hard red winter wheat. We are just hard. So that would mean for federal government and CBN coming to say that they will restrict forex inflow, that will also push up prices further. And it's also in a bid to encourage local producers to increase production, which if that is done, even if we can't use our own wheat, looking at the type of the wheat for our own for production process, we can still export and earn more, and we can add through value chain, add more value to this before we export it to give us more revenue. At that point, we'll be, even if we are importing that particular type, we'll be still earning some money, as government will be making some.
All right. Thank you so much,
Thank
Pelumi Olanubi, for sharing your thoughts with us. And I wish I could ask you, FDC is forecasting 25% food inflation, but I guess we can do that on Thursday.
Yes,
we can talk about that. Thank you so much for sharing your time with us.
Thank you so much for having me.
Well, we'll just take a moment, and when we come back, we'll continue with Business Morning.
And it's the last week for the month. Activities in both the equities and fixed income markets have been high. Earnings season is upon us. FGN bonds auction actually was Wednesday. And what should we expect in the month of May? Adedoyin Allen, AG Managing Director, Afrinvest Securities, joins us now. Thank you for joining us.
Good morning. Thanks for having me.
Good morning. So the equities market started the month of April on a negative note, despite impressive corporate results. But we saw the trend reserved last week. As this comes to an end, what do you see in the month of May?
Oh, okay, thanks. At the start of Q2 2021, which started with the month of April, sentiment in the market was largely negative as a lot of investors sold off their position across all sectors. And this was at the back of profit taking following the full year 2020 results we saw of most of the companies, especially on the bellwether stocks. Also, investors shifted focus to rising treasury bills as we observed the bi-monthly primary markets auction conducted by the CBN, where yields on the 364-day tenor advanced 100 basis points over a three-period auction. However, we've seen that this trend, that's the negative trend, reversed due to the Q1 2021 earnings season again. Investors are taking position in fundamentally sound stocks like MTN, Dangote Cement, Zenith. And going forward, we're expecting more earnings release, and we expect investors to position in ahead of the release. And this will be the catalyst for market performance in the short run.
So with the new structure of the Nigerian Exchange Group, used to be NSE, the Nigerian Stock Exchange, what should be the quick wins to improve sentiment in the market?
Okay, we would expect that the Nigerian Stock Exchange collaborates with Securities and Exchange Commission to automate the e-dividend process at the point of stock purchase in the market. This will significantly reduce the number of unclaimed dividend in the market and also boost investors' sentiment.
All right. Rising the yield environment, keeps going up, and we actually expect low participation in the equities market because of these. Are there any silver linings?
Yes, there's always an opportunity in the equities market. While the fixed income yield continue to improve, investors are still faced with a negative real return. If you recall the composite headline inflation that was recently released by the Nigerian Bureau of Statistics shows inflation at 18.2%. And this is still expected to rise due to volatility in logistic costs as well as the sustained farmer herders crisis we're experiencing, and also the effect of the COVID-19 pandemic on food inflation still remains. So we expect local investors to continue to source for higher yields on fundamentally sound stocks in the equities market. In addition, the Q1 2021 earnings season is also here. Investors are also trying to position in fundamentally sound stocks in order to gain positive return on their portfolio.
All right, so the 1 month regulatory requirement for the submission of corporate results, we expect to see more results this week. What are your expectations for the companies?
Okay, yeah, we are largely positive. We have a positive outlook for most of the results we're expecting, especially on the industrial and banking sector stocks. And this is based on their performance in full year 2020. Also, there was a data on electronic payment channel released by the Nigeria Bureau of Statistics for Q4 2020. We saw increase in the volume of transactions these domestic banks are transacting. So with this, we expect that the results will be largely positive, and this would be the catalyst that will steer the market performance.
The sentiment on banking stocks have been really positive for a while. Now, what do you think is driving that? Why the interest? One would have thought the oil and gas would be the most interesting to investors.
Banking stocks are quite volatile. And like I said, the figure released by Nigerian Bureau of Statistics shows that there are a lot of increased participation in electronic payment channel, which will also improve the bottom line of the banks. And because most of these banks also declare dividend, and that's what most investors are particular about, earnings. So that's why we're seeing the traction in the banking sector.
Oh,
okay. Well, Dangote Cement, 100 billion naira bond book building is on. What are your expectations for this?
Yeah, we expect qualified investors to take interest in this corporate earning. And this is on the back of the recently closed MTN 7-year bond, which was issued at 13%. We saw a whole lot of investors' interest or indicate interest and participation in that bond. Risk-averse fixed income players continue to source for higher yields. And most of these corporate bonds, their yields are usually at a premium from the domestic secondary market listing. The bond will be the Dangote Cement bond will be closing on Thursday. That's the 29th of April. It has 3 different tenors. That's the 3, 5, and 7-year tenor with yield guide ranging between 10.7 and 11.25 for the 3-year, 12.3 to 12.5 for the 5 years, and also 12.75 to 13% for the 7-year, which is obviously at a premium to domestic government bonds. So we expect, and it's also has a AAA rating by Moody. This is also to make it attractive for investors, and it's also going to be listed. So liquidity is also something that attracts major investors. So they don't have to hold till maturity. If they want to exit at any point, they can sell it off. So we're expecting a whole lot of savvy long-term investors to take position in this.
So the rising fixed income yields, do you see this impacting on corporate debt issuance?
Yes. The rising fixed income yield, we've seen more corporates take short-term and long-term financing through the money market via commercial papers and bonds. And this is because the prime lending rate for bank is currently at 16%, which is far more expensive than what they would get in the market. And also most banks don't tend to give out long-term loans. So we expect more corporates to seek financing through the capital market.
So what's your general outlook? I mean, the month of April is ending. We're going to the month of May. What's your outlook for both markets in the month of May?
Yeah, the outlook for May is still going to be positive. Like I mentioned earlier, on the back of Q1 2021 earning release, investors are going to position ahead of this to take advantage of the rally in the market. While taking advantage, we encourage investors to position themselves in fundamentally sound stocks.
All right. Thank you so much, Adedoyin Allen, the Acting Managing Director of AfriInvest Securities Limited, for sharing your thoughts with us this morning.
Thanks for having me.
You're welcome. So for more on the market, we have Edidiong Iwang to tell us, I think, more good news.
Yes, and you're right. I guess the positive sentiments from last week spilled into this week's trading session. And I used the spilled because, I mean, the gains we saw yesterday were marginal, but, well, let's just thank God that we saw some gains in the market yesterday. The all-share index was up 0.04% at 39,318.52 points, while the equity cap was at 20.577 trillion naira. Now, the month-to-date returns currently stands at plus 0.7%, while the year-to-date stands at minus 2.4%. So if we keep seeing these gains in the market for the rest of the week, at least we would have ended the month of April in a positive session. Volume, value, and deals. Our activity level was mixed yesterday. Volume was higher by about 14% as we saw 329.73 million units worth 2.05 billion naira, all traded in 4,308 deals. Now, Transcorp was the most traded stock in terms of volume with about 92 million units. While value, we saw GT Bank take that. In the sectoral performance, now that was also mixed. The banking sector was down 0.07%. Now that was due to the declines we saw from Zenith Bank, although we saw some gains from ETI, from Access Bank, and so from some other lenders. But then Zenith Bank captured those gains. Consumer goods was down 0.01%. We also saw a lot of interest in Nigerian breweries yesterday, but then there were also some declines that offset that. Industrial goods was up 0.07%. That was due to the gains we saw from Lafarge yesterday. Insurance was up 2.22%. Now, we've been seeing gains from the insurance sector, and that has continued yesterday as well. Oil and gas was down 0.34%. For the unlisted securities market, now the market began the week on a negative note as the NSI was down 1.15% at 776.13 points, while the market cap was at 551.68 billion naira. But before we go on with that, let's talk to Charles Fakruga, the Chief Operating Officer at Super Commercial Trust. Good morning, Mr. Fakruga. Thank you for joining us on the program.
Yeah, good morning. Thank you for having me.
So we've seen a couple of earnings coming to the market this week, but let's just begin with ETI and Wema Bank that were released yesterday. What did you make of those numbers, and what stood out for you the most?
Yes, for me, ETI has proving to be one of the market leaders. They have tried. We've seen gross earnings increase for about 10%, and of course the profit before tax also increased. The same thing, earnings per share. So you can see that all their numbers really increased. So we must give kudos to ETI for that performance. But I think they can still do better in terms of managing their cost of operation.
So what of Wema Bank? What did you make of those numbers?
Yes, Wema Bank, well, has not been too good. But again, with a dividend of 4 kobo, they are paying from an earnings percent of 12 kobo. I think that is it's a good start, and I think most of the shareholders of Wema Bank will really appreciate that little dividend. And of course, at the same time, with profit after tax about 4.6 billion naira, I think it's a good start, and these figures are supposed to really put Wema Bank in the right perspective. Of course, the board and management has to do a lot of strategic thinking and position the bank, because Wema Bank is supposed to be among the best banks in Nigeria in terms of its maturity and being there for a very long time.
But still on the banking sector now, with the earnings we've seen so far, we've seen about 4, UBA, I think Zenith Bank, ETI and Wema Bank. What are your expectations from other lenders as we expect their results?
Yes, so looking at their performance for last year audited accounts, despite the COVID-19, some of them still try to post very good earnings. Now, looking at their Q1 for this year, I think with what they have done last year, I believe that, looking at some of them that have also posted, you can see the trend. I see an improvement in their earnings, and that has to be sustained if the bank management and board do a lot of strategic thinking, because we are having challenges in terms of security. So they have to do a lot of work in terms of re-engineering and satisfying the average customers. Then you begin to see their earnings doing in the positive territory.
Okay, let's move to the consumer goods sector now. Cadbury released its earnings yesterday. How would you rate that?
Yes, I looked at the results. I saw the revenue was up by about 4.3%. That's about 8.9 billion. Yeah, that is also not bad. But I think what is wrong with Cadbury is their cost of sales. They should be able to become more creative, reduce their cost of sales, so that will impact on the profit they are making. You can imagine for Q1, they are making a profit of just 60.2 million naira, which is a far below. It's down by over 60%. So I think the management of Cadbury has to do a lot of work in terms of reducing their cost of sales at the same time, because once your cost of sales is reduced, you improve revenue, then of course it's going to impact on your profit after tax. So they should do more work in terms of reducing their cost of sales.
Well, we hope someone from Cadbury is listening and hope they take that advice. But still on earnings now, what are your expectations from the earnings of industrial goods giants, Boa Cement, Dangote Cement, and Lafarge?
Yes, you can see that those companies you have mentioned are market leaders in that sector, and from their audited accounts that the earnings they posted, we saw what they did, the likes of Dangote Cement, Boa, Lafarge. I see a slight improvement in their activities. Again, once they're able to take care of their cost of production, the power issue is there. If they're able to do that, I see an improvement in the earnings numbers that we're expecting from them. However, all this will depend on the macroeconomic environment.
I guess we've lost Mr. Fakaga there. Well, just like he was saying, we've seen some of these industrial giants moving into the energy sector, and that will really be good for the likes of Dangote, and we hope that that would boost sentiments towards those companies. But just before we get him back, the unlisted securities market, we saw about 7.98 million units worth 173.95 million naira, traded in 15 deals. Now, I would recall that since the admission of the shares of NGX on the NASA platform, we've been seeing huge turnover of volume, value, and deals. Usually, we'd see way less amount of units traded and less value as well. But since that admission of NGX, we've seen a lot of activity there. We've also had some stockbrokers say that a lot of people have been holding on to their shares of NGX, and we're also looking forward to see when the shares of NGX will be listed on its own platform to give more people the opportunity to trade in that stock. The fixed income market, the bond market it continued its bearish run yesterday, as we saw the average yields rise slightly by about 1 basis point. Now we saw average yields expand at the mid, the short, and the long end of the curve. We saw more demand for the May 2029 bond. And on the bond market, we saw 26 deals worth 61.80 billion naira. But to talk a bit more about the currencies market is Ajibola Ero Phillips, the head of FX trading at FBN Quest Merchant Bank. Good morning, Ajibola. Thank you for joining us on the program.
Good morning. Thank you for having me.
So what's currently driving activity at the currencies market?
I'm not sure there's much in terms of activity because supply is still quite soft. There was a bit of intervention yesterday by the central bank, specifically for the FBI in the IRD window. But if you look at the total turnover traded yesterday, still very, very low, in fact, right from where we should be. But at least it's encouraging to see that CBN has started intervening for FBI. Rates still hover around the 415 handles, which has been like that for quite a long time. We've opened around the same area. We opened the market at 410 today. Our market is just relatively quiet with not much going on in terms of trading.
So against the pound and the euro, what's happening in that segment with the naira?
So because it's derived, whatever it is that's happening on the dollar naira side happens in respect to the dot currency as well. So not much in terms of activity, especially in the back market on those three currencies really.
Okay, so what's your outlook for the currencies market this week, or at least for this month?
Probably feels still stable around this level, just because supply is still quite, especially from autonomous sources, supply is still quite far from where we should be. We're still going to be seeing that market is still one way right now. It's a demand market right now, and we expect that will continue in the near term.
All right, Ajibola, thank you for your input on the program. Have a lovely day.
You too.
Ajibola Ero Phillips is the head of FX trading at FBN Quest Merchant Bank. Now back to the fixed income market. At the Nigerian Treasury bills market, we just had we saw deals on one bill, which was the April 2022 Treasury bills. There were 10 deals in that market worth 5.68 billion naira. But then the average yield closed flat as there was no change in that segment. At the CBN special bills market, we had 2 deals worth 1 billion naira. At 6.20 discount. The Omo bills market was also bearish yesterday as we saw yields rise by about 2 basis points. Not much, but we've seen yields rise in the fixed income space lately. Hopefully, with all that's going on in the country, we get some positive news from the macroeconomy soon. I mean, Ini and I were speaking earlier this morning about how we're watching the news and it's just bad news upon bad news upon bad news. But that also, it affects investor sentiment because sometimes you think about it, wouldn't I just keep my money in the bank than to put it somewhere else, and then I'm hearing stories. No one likes to play with their money.
Of course, but it's hard earned.
So we'll just keep watching to see how the market moves. At the same time, the market is very unpredictable, so we never really know what happens. Just to keep our eyes focused on the market, keep our fingers crossed, and
also
hope for
focus on the
sentiment.
macroeconomic issues and factors, because those also determine where people want to put their money or what plans they have for the future.
At this point, that's what's determining what's going on in the market. I mean, apart from the equities market where we've seen some earnings come in, but then once the earnings season is over, what else are investors looking at apart from the macroeconomic
What else will drive activities? Well, all right, so we hope for better days in the market and in the country, obviously. Well, we'll take a break now. When we come back, we'll head to London. welcome back. We now head to London. Juliana is waiting by as usual. Good morning, Juliana, and thank you so much for being there for us always. Well, we begin with HSBC.
Good morning, Annie.
Yeah, they posted a 79% rise in pre-tax profit for the first quarter of 2021. Things are looking bright for the banking giant. What drove this?
Yeah, things are looking bright for HSBC. Pretty robust results that they announced early this morning. In fact, their shares were trading 2.8% up in Hong Kong, and that's because of the strong start to the beginning of the year. Noel Quinn, the chief executive, has cited the positive economic outlook, even though uncertainty does remain. HSBC are really transitioning themselves at the moment. They are Europe's biggest bank, but of course they're more profitable in Asia. So they are shifting hundreds of billions of dollars of assets out of Europe and the US into the Asian market. They've also pledged to reduce costs of £5.5 billion by the end of the year, which will result in about 35,000 roles being lost. This is all happening amongst them also trying to reduce impairment costs, so bad debt that they had put aside, that's been significantly reduced this year, which is why their first quarter profits were so strong.
Yeah, and Tesla is also doing well. Electric car sales is booming as the car company makes $438 million on revenues of $10.39 billion. But there's also the investigation on the crash of one of its cars.
Well, Tesla are doing pretty well. Again, following on from HSBC, they've had a great start to the year, but their shares were trading lower on Wall Street by about 2% after they made this announcement. It's got nothing to do with electric vehicles. We know this because I believe earlier this year, they've had orders of over 180,000 electric vehicles. This is 10% higher than what investors had expected. But a lot of people are looking at their profit margins. So yes, revenue has increased and has jumped up in Q1, but profit margins have been tampered a little bit. Elon Musk, famous CEO, is citing two things. One is the higher supply chain costs. We know that the pandemic has really created a bottleneck when it comes to manufacturing and production and shipping things abroad. And also a lower than average selling price as people are starting to transition away from petrol and diesel vehicles into electric vehicles. The prices have to come down. So investors were really honing in on this specific detail. So even though it has been a great year for Tesla thus far, how are these profits going to be sustainable in the long run is a big question.
And MPs are saying that the lockdown fine system is muddled, discriminatory and unfair. What's going to happen now?
Well, there is a parliamentary review taking place since over the past 12 months. There have actually been 85,000 fixed penalty notices given to individuals. Thank God I wasn't one of them because I stuck to the rules. And this ranges from £200 if you are not wearing a mask to £10,000 if you host an illegal party. A group of MPs have been looking at some of these fixed penalty notice, and they have found that they are quite discriminatory, especially if you're a man, if you're from an ethnic minority background, or if you live in a socially deprived area. According to the judicial review, these new ways of living have changed 65 times. So 65 times in the past year have the rules around coronavirus and restrictions changed and altered. They don't believe it's been clear and fair enough. And so what these MPs are trying to ask the government to do is to look into some of these fines to have them overruled.
Wow. We hope that will not stop people from sticking to the rules to curb the spread of COVID-19. Well, thank you so much, Juliana. We'll talk to you later on in the day.
Thank you.
Well, let's take a peep into the crypto market now with Laddie Williams. Laddie, I think at this point it is very important for us to emphasize the fact that we report the markets. Channels Television does not.
We do not sell any of these assets.
Do not engage
we only
in the
report
sale of
the markets.
Bitcoin, of any cryptocurrency.
Exactly.
And you have to know that We have our channels website, but so you have to be very sensitive about which of them you go to.
Very careful when you're visiting
and
websites.
yeah, this is our correct
Yeah.
channels website. We do not sell, we do not deal, we do not endorse any cryptocurrency Bitcoin platform. We only report the market.
Exactly.
That is what we do as a news organization.
All right, Ni, thank you for that. Let's look at the market now. Well, market cap, we have $2.06 trillion, up about 4.57% this morning. 24-hour volume, $151.75 billion traded in the overall market, down about 5%. Bitcoin dominance, down about 49, about 0.36% at 49.72. Price of Bitcoin is at this morning, 8 a.m., 54,654. Up 4.24%, up from that massive pullback we had late. Let's talk to Adekunle Omilana now, digital market analyst. Hello, Adekunle.
Hello, I'm here with you.
Good morning. Thank you for joining us. So, Bitcoin seems to be on the rise after that pullback on Sunday. What are the key prices to watch at this moment?
I think in the last 2 weeks, we've had so many downs, so many pullbacks, and then we've been up again. And then at this point, the only way is up only, because the dip happened on Sunday. So it was very fast. It came back on Monday. So all things being equal, considering that there's no bad news, there's no government reports, any powerful person in the world saying anything negative on Bitcoin. So all things being equal, Bitcoin is going up only.
So there's no FUD right now?
Okay.
I said there's no FUD at the moment.
There's no FUD, up only.
Okay. Well, how are you trading the market at this moment?
So, you see, we have traders and we have investors. So I think at this point, it's just better to invest. I think being an investor is better than being a trader. So you see people who have bought, and the Nigerian inflation rate also makes it hard for people to spend their fiat currency. So this is why I advise everyone to buy Bitcoin. If you have spare money, just buy Bitcoin and leave it there. And let's see what happens in the next 6 to 10 to 12 months. And also I tell parents, instead of opening savings accounts for your children, you can just buy Bitcoin for them. So I think that works better being an investor. Just invest in your future. And then our children and our great-grandchildren will thank us for buying Bitcoin for them.
But we always have to remember it's a very volatile market, so you need, a solid financial advisor before you trade in this market.
Of course. And then being a trader is more risky than being an investor. So I think, and then in the long run, Bitcoin has proven itself in the past 10 years, that's proving itself that yes, it's actually a good investment.
All right, what alts are you watching for the week?
So for now, I think the coins that have been doing well, so we have Solana doing well, printing money. The Solana ecosystem is growing, the FTX exchange is growing. So I think Solana is going to do well. And then so many other altcoins
All right, Dekule, thank you so much. Great having you on the program today. Thank you.
Yeah, thank you. Thank you for having me.
All right. All right, Ini, there you have it. We're still on that bounce, today.
Yeah, recovering from the fall over the weekend.
Exactly.
Wish you all the best, you and your Bitcoin. Well, that's where we'll draw the curtain on the program today. Thank you so much for watching. I'm Ini John Mekwa.
And I'm Ladi Williams. Thank you for watching.